Howdy, folks, and welcome back to the Stockcharts TV studio here in a delightfully sunny Redmond, Washington. My name is Grayson Roze. I'm the Chief Strategist at Stockcharts.com. As always, we're kicking off the month with a fantastic special. I got a great guest. His name is Dave Keller. You might have heard of him, Chief Strategist at Sierra Alpha Research. Dave, good to be back with you in the studio. It's been a while since we've done one of these together.
It's been a minute.
We kind of did the dueling top 10 last month.
That
was kind of fun. I liked that.
Yeah.
But we're back together. We're going to have a good time today.
Way better.
We are kicking off the month of June. I don't know if you heard. I'm not ready to accept that it's September. So we're going to talk about the month of June. So excited. Summer's just kind of getting going. Dude, where's this year gone?
Yeah.
Crazy.
Going quick, right?
Can't believe we're already in September. Speaking of September, we got some seasonal weakness that we're a little bit concerned about. We were talking about that before the show.
Yeah.
We're going to get into our top 10 charts to watch for this month. But we got to talk about the context of these picks. We got to talk about the environment that we're making these selections in. So let's jump into it. I know you've got plenty of thoughts on the market.
Yeah.
We might have some inverse perspective
I think
here.
so. Yeah.
So how are you feeling about this market?
I mean, not great would be my summary, okay? And I will say this is a different kind of discussion than we've probably had, or a different situation than in recent months, right? So coming off the April low, sort of May, June, July, so many signs of a robust equity market.
Yeah.
Strong leadership from the kind of growth names you would expect to lead.
Yep.
Enough participation that it seems healthy.
Broadening breadth.
Higher highs, higher lows, broadening breadth, expanding momentum, all of those things that sort of healthy bull markets should look like this.
Yeah.
And when I look at the conditions today, I think you can check less of those boxes.
Yeah.
So for me, when I think about, major tops in history, some of the common features would be weakening breadth conditions as less stocks participate. It would be weakening momentum as there's less buying power. It would be a leadership rotation as those previous leaders start to struggle. All three of those things I think we've seen from July through August and now into early September.
Yeah.
So while the trend is still positive, so as a trend follower, I still own plenty of stocks and I'm still generally positioned for the market to keep going higher.
Sure.
I've got some pretty clear lines in the sand that I'm watching, and I'm not far from where I would start to lightening up, given the fact that we're showing very similar conditions to what we've seen at previous tops.
Yeah. So it might not be super inverse perspective, because I feel everything that you're saying. I think I'm just kind of emphasizing maybe the other side of it, which is that kind of trend following side.
Fair enough, yeah.
It's funny, I got to pull up this chart list. So every Sunday, one of the routines that I go through, I have a simple chart list with simple charts. We might have showed this on the show before. But I have this little exercise that I go through. I scroll through these charts very fast. And all I'm doing is asking myself, is this working, is this struggling, or is this failing? Yeah. It's the major indexes. It hits a couple of different cap levels. And I'm just asking that simple question. This is combined with all the other analysis that I'm doing, digging into market internals and all the stuff. But it's an incredibly helpful exercise of just saying, is this working, is this struggling, is this failing? Yeah. When I scroll through this list, which we're going to do right now, it's all working. And it gets to that trend following perspective. We say this all the time when we're talking about individual stocks. I'll look at a stock and I'll say, price is above the 20-day moving average, and the 20 is above the 50, and the 50 is above the 100, and the 100 is above the 200. This thing is trending and it's working. We got all the major indexes looking like that right now.
It's fair.
It's tough to refute that part. So I've got those same concerns, I think. It's just kind of overweighted by the trend following approach. If we scroll through this list really quick, here's the total market. We've got the S&P 100, mega caps, sitting above those moving averages. They're all sitting on top of each other. This is the S&P 500, the S&P 400, the S&P 600, the Russell 1000, and the Russell 2. They're all moving higher. I would say that they're, at a minimum, struggling, but most of these things are working, especially when you think off those April lows.
Yeah. They're all making higher highs and higher lows. They're all above moving averages. One index that you don't have on there is the NASDAQ 100. Right?
I don't know what that is. What is that?
It's these growth stocks you may have heard about. But does that concern you? Because I think
it does.
When you think about leadership rotation, right, you've seen leading growth names pull back, right?
Yeah.
NVIDIA, Broadcom, a number of these have come off.
Yeah.
The NASDAQ 100 did not make a new all-time high at the end of August, while the S&P and all those other indexes did.
Yeah.
So the question is, what's the sustainability of the uptrend if those leading growth names are not participating?
True.
Other things are still okay, and we'll probably talk about some financials that are looking pretty good. I mean, there's other sectors that are expanding, but those leading growth names represent a big weight in the S&P 500.
They do.
And I'm concerned about the sustainability of further gains in September, given the weaker seasonal tendencies, which we probably want to talk about as well, right?
Yeah, no, it's definitely true. It's absolutely a fair point, especially with the NASDAQ 100. I think, emotionally for me, we're paused here on the Russell 2000.
Yeah.
Emotionally for me to see small caps and mid caps actually start to play a little bit of catch up, that kind of offsets the NASDAQ 100 weakness and some of the growth weakness. At the same time, I mean, the Russell 2 is so much smaller, on a weight basis.
Yep.
So it's tough. You got all these competing factors.
Yeah.
But yeah, that seasonality. I mean, we actually pulled up this chart at the as we were kind of talking before the show. The seasonality on the S&P 500 just sucks in the month of September. There's really I can't sugarcoat that.
That's a technical term we use.
That's it. Yeah, exactly.
It does, and no matter how you look at, I mean, in terms of what look back period, right? If you look at the last 50 years, the last 20 years, if you look post-COVID, the last 5 years, if you look at post-election years, right? Every fourth year, every one of those different look backs, September is the worst month, or one of the worst by far.
Right.
August was surprisingly strong, given the seasonal tendencies. That's actually often a weaker month as well.
Right.
But September has almost always been a rough month, and obviously, many major corrections have happened in September into October.
The strength that we saw in August actually is what really scares me about the seasonality in September, because it's like at some point this slinky's just getting stretched. It's got to snap back.
Yeah.
So we'll see. Yeah. But we've got individual names to look at. We've got tons of charts that are out there flying to new highs. We've got some different perspectives maybe on the short side. So we're going to jump over and get to our top 10 charts to watch for the month of June, September. I don't know, some mix of those two. You're going to kick us off here. What is your first chart to watch for the month of September?
Grayson, I'm done screwing around.
I'm
going to go aggressive right up front. Okay. And I'm going to say the short NVIDIA chart is my first call.
You know we're recording this.
I do.
Okay.
A bit controversial, right? Because obviously this is a big name, and obviously this has been one of the, just perfect example charts of the strength of growth off of the April low.
True.
But enough things bother me from a technical perspective that I think you have to acknowledge that there's been, at the very least, a significant change of character on the chart of NVIDIA. If you look at NVIDIA in June and July, what makes that a constructive chart? We're making higher highs and higher lows. The moving averages, as I would describe it, in a proper order, right? Yep. And the order is, as you implied earlier, the momentum is strong, right? We're overbought when we're making new highs, which represents a lot of buying, and we're outperforming. This is a leading name showing consistent strength. In the month of August, every one of those things that I just said is no longer true. We're no longer above moving average. We've broken the 21-day EMA, which for me is kind of my initial stop.
Okay.
Today, we're actually trading below the 50-day moving average for the first time since early May. The momentum has been absolutely disastrous over the last 6 weeks. So every new high from the end of June has been marked by weaker momentum readings. And the relative strength, obviously, when you have weaker price action, when we have weaker momentum, that tends to lead to weaker relative performance, and that's happened as well. So to be clear, do I think NVIDIA is going to zero? I don't. Do I think there's a lot of room for a stock like this that has had such a significant run to pull back in a meaningful way and still be set up for probably a really good Q4 rally? Probably, and that would be my base case on a chart like this. I think it's more of a trade than an investment, playing something like this on the short side. I think you have to be more tactical with it. But I think there's a lot of room. Getting down to 150, 145, that'd be about a 38.2% pullback off of the April to July rally. The 200-day moving average is going to be right around there. I think there's room for names like that to have a painful September. But then when you zoom out, the long-term trend is still going to be okay.
Yeah.
So I think, first off, I think growth is not going to be the place to be here in September.
So a couple things that stand out to me on this chart. I mean, first off, if you're talking about shorting this name, the break on the 50-day, the declining momentum, I mean, that makes sense.
Yeah.
And even if you're kind of bullish on NVIDIA, I love breakout, retest, bounce setups.
Yep.
Let's say that actually plays out here on NVIDIA, and you just want to play the retest part of that setup on the short side. I mean, you're still looking at about a 12, depending on how meaty we get with the breakout, 12 to 17, 12 to 18% maybe, gain on that short position if we just even if we just retest the breakout.
Yeah.
That makes a lot of sense. I got to ask you about one thing too. You and I both, I think, are not huge volume guys.
Yep.
But one of the things that's really interesting to me because I do have volume on my charts, it's just not primary for me.
Yeah.
When I look at this, so I've got a 200-day moving average on the volume bars, and NVIDIA has very rarely, since the April lows, since April, has very rarely printed an above average volume day. That's unusual.
Yeah.
There's just not a lot for such a crazy rally, there's not a lot of volume on this thing.
It really hasn't been, and the volume going into that April low completely dwarfs any of the volume readings after that.
Exactly.
So it's not been a big accumulation sort of thing.
Right.
But volume-based indicators are all still pretty positive, right? So things like accumulation distribution lines still pretty good.
Right.
Chaikin money flow, like these are things that track trends in volume.
Right.
All very, very good. There hasn't been a lot of big distribution, and that's what you're not seeing. I mean, last week, we're starting to sell off a bit, volume picking up a bit. I think that if you're looking for validation for a breakdown, that a spike in volume above that average, which we've not seen much of, would certainly be like a nail in the coffin, I think, for a breakdown scenario.
I would have lost this bet, though. How many days have traded above the 200-day moving average on volume? I would have said, oh, we've had a crazy rally in
I would think
NVIDIA.
a bunch off of the lows, right?
Right?
I would think.
It's not really that.
Yeah, it's really been lighter. Yep.
Okay, I like that. I like that pick. I think you can still.
You don't have to like it. You have to accept it, though. It's my pick.
I would say two things can be true. You can still be long-term bullish on NVIDIA and find some room for a short trade on that name. So I like that. Okay, my first pick is going to be an ETF. We're jumping to KBE. This is the S&P Bank ETF. Banks, man. Financials. So this is kind of coming actually from my individual scans that I like to run. So I have all these scheduled scans in my Stockcharts account. They run every day for different groups like the S&P 500, 400, 600, NASDAQ 100. And I'm just looking at new highs. I love looking at charts. I love breezing through tons and tons of charts. I want to know how many stocks are making new all-time highs, 52-week highs, 9-month, 6-month, 3-month highs. Those are the lists that I want to be looking at. And I just enjoy filtering through all of the charts that come back on those lists. It's a little bit crazy, but it's a lot of fun for me. I spend all day looking at stock charts. It's an interesting way to look at the market because you see the individual names that are coming back. And if you're committing that kind of memory, if you're doing that every single day, you're looking at the sectors that are coming back, you're looking at the industry groups that are coming back. And so this pick, KBE, is coming straight out of me looking at all of those scan results and seeing financials just stop coming. They won't stop coming across the screen. It's crazy. I'm seeing financials everywhere making new highs. So that's what kind of pulls me into saying, okay, I might want to step back and look at a broader group of these financials. So I'm looking at things like KBE. I almost had KRE on the list as well, the regional bank index. So you go a little bit smaller. But KBE, I mean, just a classic breakout right now. We've worked our way back from those April lows all the way up to kind of the highs from the end of 2024. Relative strength is starting to pick up. I will say it's not nearly as strong as it could be. That said, I mean, they're banks, and we've had a growth-oriented market. So actually, I think the relative strength kind of contextually is pretty dang strong. Moving averages generally in the right order. We've got the 20 above the 50 above the 200. The 100 is kind of lagging there because we have chopped around pretty sideways in this name. I like that we've had this big move up. I like that we're consolidating here a little bit near new highs. That's actually a nice thing for me. And momentum looks great on this. I mean, there's not a lot that I can point to that's not attractive on KBE. Plus, you pick up a little bit of yield. And financials just kind of thematically make a lot of sense to me right now.
Yeah.
If we do see, obviously, the rate environment and all of that, but I think to me it's more a story about the deregulation that is potentially going to keep happening over the next couple of years with the administration that we have now. I think that's definitely a tailwind for banks overall. That said, we're talking short term. We're talking charts to watch this month. I think the breakout is kind of what really catches my eye. But lots to watch there, and just the number of individual names that are coming back from this space on the new highs list. I can't take my eyes off of that.
Yeah, there's so many good things to unpack with what you just said there. And I would agree. I think there's definitely a tailwind for this space given the regulatory environment. I don't see a scenario where they would be more heavily regulated over the next couple of years, right?
That's a good way of putting it.
That's a good thing.
Yeah.
for these names. And KBE sort of testing new highs. Names like Goldman Sachs, Morgan Stanley, they've already made
big
new
guys
highs.
are in
And
there.
they've been driving up.
Right.
So they're coming up there. I think to your point, what's beneficial about finding these sorts of charts is the consistency, right?
Yeah.
And you mentioned using scheduled scans, having a consistent process. It's not good enough, I don't think, to just run like the new 9-month highs or whatever it is and then just see what happens. Doing it consistently is where you
Every
start
day.
to really recognize over time, wow, I'm seeing a lot of banks on here, that means something.
Yeah.
And then shout out to Chris Verone of Strategas, right?
Yeah.
One of the top technical analysts on the street. He recently was just quoted as talking about how bearish do you want to be if financials look this good, right?
Right.
And that's something that probably tempers my bearish suggestions earlier, right? I mean, if things were really bad, I wouldn't think financials look this good. I wouldn't be, I mean, banks are pricing in pretty decent setup here. So things that should be struggling in a lot of ways are not. And so it's almost that these are taking on a leadership role being vacated by technology, perhaps.
Yep. And there's some other spaces I think that are doing kind of a similar thing. So we're going to get into some of that with some of these later picks. I know from my end, probably from yours as well.
Yeah.
But yeah, I mean, that's a good way of putting it. How bearish do you want to be when banks are kind of just working? Financials overall are just working.
They're working.
And it's not just banks too. I mean, it's a lot of like insurance names and things like that too that are flying up there.
Yep.
Lots of different ways to play this. This is a great thing about ETFs. You can play the whole space. You don't have to pick the individual. So I'm doing that here with KBE. It's my first pick.
It's a strong pick. I'll take it.
Number 2 for you.
Number 2
That
for
rhymes.
me. Thank you.
Yeah.
We're going to stay in the same sector actually, and I am going to pick American Express, ticker AXP.
I like that pick.
This is one, and again, with financials, there's so many different names to select in there. I'm glad you just went with the ETF, and I think that's good to remember. I tend to think if you have conviction on a specific name and a specific chart for a specific reason, do that. And if you don't, ETFs are a great way to play the space and diversify a bit within there. But AXP is setting up, I think, pretty well from a technical perspective. You're not really seeing divergences much as this is testing new all-time highs. I would say you're seeing a cup and handle pattern that's very close to getting confirmed here.
There you go.
I'd want to see a confirmed break above 330, which is what we're not quite getting yet this week. We sort of initially pushed up there and now we're pulling back a bit. But I love this setup, right? So a cup and handle pattern is a classic pattern popularized by William O'Neill. We have an uptrend phase. You have this big kind of rounded bottoming pattern. Ideally, you kind of retest the same resistance level. We have a shallower pullback, in this case to the 200-day moving average, and now we're threatening to break above there. And if we can get a break above 330 on stronger momentum, on stronger volume, that suggests new buyers coming in, finally willing to pay more for this stock, and much more upside potential. So I think within financials, we're seeing a lot of interesting names. I like how a stock like this is kind of filling the classic technical pattern. I like the fact that when so many names are showing bearish divergences right now, AXP and other financials, I'm not seeing that as much. Which gives me confidence that this could be a setup. But for something like this, in my opinion, it's probably a little too early. I would set a trigger. For me, it's over 330. That's where I have an alert set, and I think a valid break above there, compelling chart with upside potential.
So I got 2 things for you on this. 2 thoughts. One, I always love these credit card names. MasterCard, Visa, AXP, kind of the big 3, right? If you own one, it's like you have these built-in sister stocks that you just get to watch as well. I think it's important to do that. MasterCard and Visa have been similarly strong, not as much on a relative basis, which is a little bit concerning, but just on price alone, kind of sitting up there near new highs. They've been working. So it's nice to see that. AXP, though, on a relative basis, looks absolutely fantastic. My question I want to ask you, so I know you're not a huge 20-day or 21-day moving average guy, but when I think about this chart right now, and I think about the 330 level in particular, if we do cross above that, we're pretty stretched off the 20-day moving average at that point. I mean, right now we'd be about 4.5% above it. Does that concern you at all? Would that be a reason, even if you did get that trigger, that alert fires off, let's say, would that be a reason for you to say, no, I want to give this thing a little bit more time?
Yeah, so the timing of it is always a question, right? And I would say if you look back to like April, May, off the April low, this is a scenario that could play out here, right? We broke in AXP broke above that swing high from late March here in early May. It actually gapped higher. and then pulled back. And then you had a couple pullbacks to the 21-day EMA, which is what I'm showing here in green.
Yeah.
So I think there's a couple different ways to play a breakout like this. And I would say it's really more of a question individually on what your risk appetite is, how aggressively or how conservatively we want to play it.
Yeah.
And I know some people that I've worked with would be happy buying breakouts, buying strength, buying the new highs list,
Right.
which is where AXP, that's why I scan for stocks making new 3-month highs. It's like, all right,
Yeah.
making a new swing high, something's different, something's new, that's good.
Yep.
Maybe you take a partial position there,
Yep.
and then maybe you add to the position on pullbacks to the 21-day EMA. And I think too often, working with institutional investors, you realize it's not, I own 100% of something or 0%. You ladder in, you take a little off. And so I think, open yourself up as an individual investor, open yourself up to the fact that you don't have to just be all in or all out.
Yep.
You can add or trim positions as, things play out here. And I think the 21-day EMA, there we go.
Thank you.
We didn't
Thank
plan
you
that
for
ahead of
touching on
time,
that.
but I think
that's fantastic.
I think that's the way to think of it. So,
That's how you build positions.
I think you buy a breakout. I have no problem with that. You add to the position on pullbacks. That's a great way to sort of accumulate in short-term weakness within long-term strength.
Yep. That's a great answer.
There we go.
Well done.
Thanks, man.
All right, number 2
Yours, yeah.
for me. I'm sticking with an ETF. I'm going Homebuilders. And I mentioned that we were going to talk about kind of some, rate-sensitive names and different sort of sector rotations, some themes that are starting to work. So Homebuilders have been absolutely terrible this year. Not the type of chart that I like to see, but they're finally starting to work again. We're seeing them outperform. So the relative strength line that I've got up at the top of this chart, you can see that that's finally doing what I like it to do, which is go up. So Homebuilders are actually outperforming the market. Most importantly, though, we're pushing up 2 new highs, close to new highs. We're making some breakouts. We're taking out some key levels. Moving averages are getting back in that proper order, like you said. Shout out to Dave Landry on that, too. I like the test of the 20-day here. A couple of times, as we've been making this move up, starting to make this kind of lower level breakout. I like to call these a lower level breakout because you got the true breakout up above. But as we've been making our way up to the kind of lower level first tier breakout, we've been testing the 20-day moving average along that. You can see that little dashed blue line. I like to keep that kind of faded out on my charts. Testing the 20-day, consolidating a little bit, but now bouncing off of that 20-day again. So the 20-day is acting as support here. Buyers are stepping in there. I like to see it. We got a lot of volume coming in on this name as well. So there's actual supply and demand dynamics to work through. It's not just kind of that light trade like we saw on NVIDIA. And most importantly, I think, when you think about the rate environment, you think about rates potentially coming down. We got more news about that potentially happening today as of this recording. Homebuilders, that whole space, industrials, different kind of rate-sensitive spaces that have been under pressure because of the interest rates being a little bit higher. Homebuilders are a space that just kind of makes sense intuitively. If you think about rates coming off, homebuilders are going to get a bit of a tailwind from that change in policy. So I like this technically. I like it kind of strategically when you zoom out, you think about what's happening in the economy. I also like this. I know, again, short term, we're thinking about charts to watch this month, but let's look at the longer term chart here. I'm using these style buttons over on the left side. I've got my weekly styles loaded in here. You look at Homebuilders on a long-term basis, this has actually kind of been a consolidation within a broader uptrend. So I like that we're starting to take out some key levels that are really, really apparent there on the weekly. And when you zoom way out, I think if you look at this on like a 15-year, I mean, what a beautiful long-term trend for Homebuilders here. Lots to like there. So I think if we do see rates come off, that's going to be helpful for Homebuilders. I like it technically. I like it with the rate picture changing. Lot that I like on this group.
It's actually an interesting chart because these homebuilder ETFs have actually been outperforming the last couple months. Right? I mean, not by a ton, but
right.
there are areas of the market like healthcare, like homebuilders that I think a lot of people, for good reason, earlier in the year, totally fine to ignore these because they were absolute dogs.
Right.
But they've actually been pounding out some nice improvement. A lot of these are getting back above the 200-day moving average, kind of continuing.
Yeah.
And I'm glad you mentioned rates. I think that's a big part of the story here, right?
Yeah.
Rates come down, homes are less expensive or more accessible to people. That's all a good tailwind.
Yeah.
I was going to ask you, so there are two kind of pretty popular ETFs in this space. There's the XHB, and then there's the ITB.
Yeah.
Now, from a technical perspective, probably pretty similar at this point, but sometimes there are some differences.
Yeah.
I'm curious how you would make a decision of one versus the other. What sort of goes into that decision process of
Yeah.
what lever to pull with
It's a
those
lot of
things.
different things. A really helpful resource in this space is ETF.com. Shout out to those guys. They've got fantastic tools to help you study expense ratios, performance,
holdings data,
all the stuff.
Yep.
They do a great job. So I love to use their compare tool. It kind of comes down to a whole bunch of things. I mean, part of it is just flipping back and forth. When you have two names like that, flipping back and forth between different time frames on the same space.
Yeah.
So flipping back and forth between the weekly between those two, the daily between those two. Also the intraday chart to me. Sometimes, I mean, when you're looking at ITB, so you're looking at about a $3 billion fund. When you're looking at XHB, it's about half the size, 1.5. You can see that if you have the full quote turned on here.
Yep.
Sometimes that'll come into play. I like to have those, bigger, more liquid funds. It's kind of a whole bunch of things. Relative strength, which one's actually performing, which one has kind of a better entry for me getting in it, which one's cheaper. I mean, sometimes we were talking about this with one of the picks that's coming up a little bit later. When you have a bunch of different funds, especially some that are kind of newer, some that are older, sometimes you'll see the same kind of fund and one has like a 30 basis point expense ratio, the other one's like 90.
Yeah.
And that's a huge difference.
It's a big difference, yeah.
So it's a whole bunch of different factors. Liquidity comes into play.
Yep.
Yeah. A lot of different stuff.
There's a great book, Tensile Trading. I don't know if you've read it before.
Yes. I know the author.
The authors do a fantastic job of just like with semiconductors is one of those so many different ETFs.
Yeah.
And I think you and your father did a brilliant job just sort of laying out. Here's how you look at these different ones and which ones you have all these options. How do you select that?
Banks are a good example of that.
Another good one.
There's another ETF actually that I like in the bank space. That's the Nasdaq. It's like First Trust Nasdaq. FTXO is the ticker.
Yep.
It's just way too small for me.
Yeah.
So KBE is going to be a pretty big fund. That FTXO, which is looking great technically, when you're staring at the chart, it looks fantastic. But it's like a $250, $290 million fund. It's just too small.
That's not right.
So liquidity is definitely a factor when I'm looking at all these different ETFs.
I like it.
One real quick thing to note here on XHB. I like that you're mentioning the sort of laddering into positions, scaling into positions. However, everyone has a different name for it. But when I see a name like XHB that has kind of that lower level breakout and then the higher level breakout, this is one of the things I actually like about these trades. Technically you can call this overhead supply. It's kind of something to be aware of. But if you can take that kind of lower level breakout and then let it work, hopefully it does continue to do what you want it to do, and you have that next level breakout up top. If we can make a play through that, you kind of have another built-in spot to add. So you can sort of build in these two breakouts. I like charts that look like this. Sometimes it's just kind of nice to be able to build that position with multiple breakouts along the way.
Yep.
A little riskier though, because you do have overhead supply, so you got to be aware of that. But sometimes that's a little easier to do for people emotionally than buying on the 20-day, because you're kind of buying weakness in a way.
Yep.
So anyways, just something to note about XHB.
I like it.
We're going to jump on to your third pick of the day.
Okay, here's I'm back to the technology sector, but this is more of a telecom name.
Okay.
Motorola Solutions, MSI.
Great chart.
The chart of Motorola actually reminds me of the chart of Homebuilders in a lot of ways, right? And I think for me, for a lot of individual investors, a lot of advisors, right, your portfolios over time have become more and more growthy as those growth technology in particular, and not Motorola tech, but like AI sort of technology, they become huge weights. And so at some point, and I would argue we're probably past the point where we really want to think about how big do I want to have these bets be, particularly if they start to pull back, which a lot of them are. So I think rotating into areas of the market that are starting to emerge is such a brilliant way to think about it. And for me, the chart of Motorola is actionable because we finally broke above the 200-day moving average. That happened really at the beginning of August. So we kind of stalled out here. We had a couple of attempts to get above the 200-day back in the spring. They didn't follow through. We come off of a real consolidation period. We finally break above the 200-day moving average, had this awesome pullback to an ascending 21-day EMA, and now we're rotating higher yet again. There's a lot of echoes to what you talked about with Homebuilders. You have this overhead supply right up to the previous all-time highs. We're actually testing the Q1 high this week around 480 on Motorola. But I think the higher highs and higher lows, the improved momentum, the improved relative strength, sets this up as a pretty key name. There's not a lot of charts like this if your portfolio has become a lot of kind of extended charts, Palantir kind of names that have these brilliant runs. Motorola is still underwater from Q4 of last year, which for me just means there's a lot of potential here. And the strength that you've seen in July, now continuing in August, making a new swing high going into September, I think that's a really important sell-off here. I'm not or setup here.
Yeah.
I'm not saying a lot to be concerned about on this type of chart. This is where I think using something like the 20-day, 21-day EMA as just an initial stop is a really good way of following the trend higher, limiting your losses, but participating in an uptrend. Innocent until proven guilty. That's how I would think of it.
Yeah. So one of the changes that I've made in the last maybe 2 years, year and a half, is I've changed my default style. So on Stockcharts, of course, you can have a default chart style. When you run a scan or you save something to a list, that's going to be sort of the chart that comes back, right? And then using features like those style buttons over on the left side, you can really quickly change between different chart templates, chart collections of settings, things like that.
Yeah.
One thing, again, I run those scans, the new high scans all the time. That's my favorite thing to do. I do it every single day. They're scheduled for me. Great process. One of the things I got frustrated with over time was that I'd be running scans for stocks that are making relatively short highs, right? Short time frame highs, 3 months, 6 months, 9 months, 52 weeks. All-time highs are a little different, but and one of the things that would start to frustrate me is I would see something that looks fantastic on the daily because it's making new, let's say, 9-month highs. And I'm like, oh, this thing looks awesome. This is a great breakout. I totally want to buy that. Let me just click over to the weekly chart and see what it looks like. And the thing's in this 20-year downtrend. It looks absolutely awful. I don't like buying names like that. I don't like buying names that are in long-term downtrends, even if the daily looks great and I think I can pick up a nice trade on it. I like to buy things that have, I call it a history of winning. They're going up over a long period of time, and the daily looks great enough for me to trade it the way that I want to trade it. MSI is a perfect example of that. This is a great looking daily chart, especially for the time frame that I trade. Everyone is different. That's a great looking daily chart though. Breaking out beautifully, relative strength, you got all the things. And if you click over to a really long-term chart of MSI, what a freaking uptrend. So I've changed my default style actually to be this 5-year chart so that when I'm running those scans, I see a name like this that I know is making, let's say it's a 9-month high, I know it's making a 9-month high, and I'm going, wow, that's a really beautiful long-term uptrend. Here's a year and a half, let's say, of consolidation. Ooh, this is one that I want to check out. Then I can quickly jump over to the daily and go, yeah, look at that. Now we got a great breakout, and we've got a chart that has a history of winning. This is my favorite pick of the day. Why didn't I pick?
There we go.
Well done.
Woo!
I got to ask you, though, one question.
Do it.
You and I are both big into RSI. Both use RSI in our charts, and I know we get this question a lot. RSI is overbought right now. Well, close to overbought. It's pulled back a tiny bit. But sitting up there above kind of the classic 70 level. How do you feel about that with a name where this is?
I mean, pretty good, right? And I mean, on the chart, you look back to last year, like mid last year, right? Look at like May, June, July of 2024. Look at all those times we're overbought. Overbought means up a lot. That means we're going up, right? And so that's a good thing. And as a swing trader, does an overbought condition mean today's the day I probably want to take a long position? Like probably not, because that means we've maybe leaned over our skis a little bit. We probably pull back. But long-term uptrends are marked with overbought conditions. That's what new highs should be doing. You get nervous when new highs are not overbought, and that's what I think we're seeing in charts like NVIDIA. To go back there, you're seeing new highs but weaker momentum. New highs being overbought, like that's what a good, strong uptrend is going to look like. So I'm not afraid of that. I would argue that's actually a good, probably tells you short term, is there a pullback maybe? But long term, I think that speaks to the strength that we're seeing, the accumulation that's happening for the stock.
For anyone who's kind of new to RSI, I wanted that question to be asked because it's an important one.
You
get that a ton. People say, well, it's overbought, so I can't buy it. It's too much.
No, sometimes those are the best opportunities.
True, especially when you combine it with price.
Your third pick.
My third pick. We're only on 3. We're going real fast here. My third pick is going to be IBIT, IBIT.
Bitcoin.
This is one of the Bitcoin ETFs. Now, obviously, Bitcoin's been really interesting right now. We've seen it totally lose its big old Zeus Thunderbolt rod to Ethereum, which has been fascinating to see. And all these Bitcoin people are like, oh, I don't like Bitcoin anymore. I like Ethereum. I'm not a huge crypto guy, I will admit, but I do like that ETFs have come into this space. They've given traditional equity folks like myself an easier way to play cryptocurrencies.
Yeah.
And the thing that I've always loved about cryptocurrencies, I gotta admit, is that they're just kind of pure, right? It's supply and demand dynamics. Now, you could take the opposite stance on that and say, why does anyone care about any of these things? Yeah. But I like that it's pure supply and demand dynamics. There's not all the complicating factors of earnings reports and executive changes and stuff that you get with stocks, right?
Yep.
Now, obviously, there's still economic forces and everything like that. But I've always liked that cryptocurrencies are kind of pure. IBIT right now is interesting. I've got this actually fairly zoomed in. So we're looking at a 1-year chart. If we just zoom this out a touch more to be a 1.5-year chart, which is kind of my typical time frame on a daily, really kind of nice consolidation. I mean, it's made that breakout. It's been consolidating. It's coming back. We mentioned the breakout retest bounce earlier. That's kind of exactly what's setting up here. We've made that breakout. We've come back down to test it from the top. Now we're bouncing, and I want to see this continue. I don't love that we're sitting below some key moving averages. We're actually sitting below a declining 20-day. Yeah. It's still a rising 50, but we're below that, and the 20 is below the 50. So some of the trend dynamics, I would say, in this aren't great, and relative strength in the short term has not been fantastic. In the long term, though, I mean, it's Bitcoin. It's still outperformed absolutely everything. And I still like, I think, sort of price first mentality. I still like that this thing is a breakout, retest, bounce kind of setup. Momentum is just awful. That's definitely the pain point for me on this chart. When we look at the RSI down at the bottom, makes sense with some of the moving average dynamics that we just talked about, but momentum definitely not there. And it's pretty interesting. I mean, again, as not the biggest crypto guy in the world, it's pretty interesting to hear folks. I mean, we talked about like Adrian, a good partner of Stockcharts, kind of shying away from Bitcoin a little bit more, sort of taking more of a bearish stance. So that is interesting to me, but I still got to say, I mean, just that breakout and that retest and that bounce on IBIT, I like it. It's catching my eye.
Yeah, there's no denying. I mean, for years, the discussion was what would happen if ETFs actually made this market more accessible? Because there's a very small subset of investors that will open a digital wallet and save their key somewhere.
Right.
There's a larger subset of people that would open a Coinbase account.
Yeah.
There's a much, much larger community that would buy an ETF. Right?
And you see that with the size of these
You're
funds.
seeing that with the flows have been fantastic. And that's what's driving things higher. So all of that is totally true. Talking with, I interviewed Adrian on my podcast not too long ago, and this is Adrian Zadunchik, and he had talked about the seasonality, right? Now that Bitcoin's been around enough, you can run some seasonality studies. You could do it on Stockcharts using GBTC or even spot Bitcoin prices, and you'll see that September actually tends to be pretty weak, similar to equities, right? Risk assets generally, but Q4 tends to be remarkably strong. So I think it's pulling back kind of where you would normally pull back, which makes me think, are we setting up for a nice breakout? I'm wondering, I know you're not a big Fibonacci guy. That's not something that comes up. I definitely use them a lot more often. But what's interesting on the chart of Bitcoin, interesting on the chart of IBIT, I'm throwing the Fibonacci retracements on here. And if you take the April low and you go up to the July peak and you consider that next sort of like a retest of the peak, 38.2% is just below 60. It's around 59 and change, which is right at that resistance level. So this is what we call a confluence of support, where there's a number of different approaches all kind of coalescing around that same level. So with the chart of Bitcoin, with the chart of a lot of these ETFs, they're kind of pulling back in a structure that's actually still pretty constructive. But we're right at that point where if there is kind of a tactical low, we'd sort of be at that point where that might happen. I'm watching some of these levels pretty closely on a number of these ETFs as well.
I think we got to send that chart to JC Peretz because he'll buy us a beer. Because I know he's going to like that one. So
there we go. All right, done.
There we go. That's our plan.
Note to self.
We don't pay for drinks around here. We just send charts to someone and they give us free booze. IBIT is definitely one to watch. I think for me this month. A lot of interesting things there. I do want to note one thing. So it's been we're halfway through this, and I haven't mentioned these green and red lines that are all over my charts. If you've watched this show before, you might have heard this, but. This is my method for actually marking sort of ideal entry points, targets, different things like that. So I've got these horizontal lines actually built into all of my chart templates. I've got green lines for entry points. When I actually take a position, that changes to a solid green line so I know exactly what my cost basis is. I've got solid red lines for my stops. I've got orange lines for kind of areas of concern. blue lines for basically price targets, places that I want to add, things like that. And then I've got these funny gray lines that I fill in that are basically 5% tranches on trades when I take it. So I know actually, oh, this is a 5, 10, 15, 20% gain because I kind of mark those on the chart. So one of the interesting things about this for me, I like to trade a pretty consistent, this bracketed stop system. So I've got about an 8% stop and about a 12% stop typically. And I'll write things off because that stop doesn't, those percentages don't work for the chart that I'm looking at. This is pretty dang close. I mean, this is just too volatile for those ideal stop percentages for me. I still draw them on the chart at levels that make sense. I'm not just doing 8% blanket, that's what it is. I'll find a zone in that chart that's kind of around there. But it's a helpful way to actually sort of see, when you're looking at a chart like IBIT, you can see that an 8% and a 12% loss doesn't really get you very much meaty price action to work through.
Yep.
When we go back to something like XHB, gets a little bit meatier. When we go back to something like KBE, it gets really meaty. We actually got quite a lot of price to work through here before you get down to an 8%. And you can see that that's actually below the 200-day moving average even. So it's a nice way to actually, having those consistent percentages, it's a nice way to judge different names because you're looking at things on a percentage basis. It's kind of your own personal volatility metric. So anyways, that's kind of one of my notes here on this IBIT trade. It's just volatile. I mean, we know that with Bitcoin, it's just a lot more volatile than other names. So
I mean, with charts, it's easy to lose or kind of disconnect from what the percentage swings really mean. Palantir is a great example of that. Some of those other names that had these exponential rises.
Right.
It looks kind of like a normal chart, but when you really look at the swings, and you can do use the inspect tool to just really visually see what they mean, you realize how significant the swings are. And I think that's an important part of kind of using the charts as a discussion you're having with the markets. That's a great way to really put things into context and understand what they mean.
And that's why we always like to, I think you do this too, I like to put the price performance line for that relative strength line. I like to use the price performance line. So down here in the settings area, I've got this price performance indicator. Price performance indicator. Yeah, go back. With the $ symbol trick. So that gives me a relative strength line, but price performance is a percentage scale.
Yep.
So that's kind of another easy way to set this up. You can see on a percentage basis relative strength. It's not just about getting kind of a random number. The percentage basis tells you a lot.
Yep. So it's a good way to do it.
Yeah, helpful little trick. Fourth pick for you. What do you got?
It's been long enough. Let's go to healthcare.
We have to.
We do. Because I think in this environment, if growth struggles, which it already has, and I don't think we're done yet, that means where do you go? And I think this is one of those really important times. If you have a big overweight in NVIDIA types of names, and if that keeps not working, you're really going to get hurt on a relative basis, right?
Yeah.
That's where your portfolio shrinks and goes the wrong way. So layering into things like Homebuilders, like Motorola, like Merck, which would be my fourth choice, I think make a lot of sense.
Okay.
Merck for me is kind of right at that point, right? A lot of times with charts, when you bring them up, it's a bullish chart, but it's not actionable. And for me, that word actionable is very meaningful. This is something I used back in our Fidelity days. We would talk about actionable charts, right? There are bullish charts, there are bearish charts. What are the actionable? What are the ones that if I had capital today that I would want to take a shot at? I think Merck is kind of setting up for that for a couple different reasons. So if you look at the trend in Merck, it's obviously been an incredibly underwhelming chart. Merck is an example of why the healthcare sector has been such a painful relative play for years, right? If you look at the weekly chart, you can see that long-term underperformance. You look at the daily chart, you see how it wasn't just the sell-off into April. This is something that's been underperforming for quite some time. It was going down for the latter half of 2024 going into this year. But from mid-April to now early September, a lot of that distribution has changed, right? We spent most of the last 12 months, or the previous 12 months, below a downward sloping 50-day moving average. Now we're back above it. We're still below the 200-day, which is why I think it's kind of right at that point. I think getting above the 200-day, which we almost did in mid-August, but did not fail to do it. That's why I'm super happy sitting on my hands and waiting for that validation of the break above the 200-day moving average. The momentum is strong, but not excessive. So in a situation where a lot of stocks are overbought and feel a little overextended, this definitely, I don't think you could describe it as that. It feels a little more earlier on. So for me, I'm a big fan of what we would call, pattern diversification or technical diversification. Not just diversifying for diversification's sake, but thinking of different types of constructive charts, right? Strong uptrends, those are good charts. Strong trends that have pulled back to a meaningful level, I think that's a good chart too. Charts just starting to emerge in a position of strength, which is where I'd put Merck.
Yeah.
It's a third bucket, and there haven't been. It's not felt like there's a lot of those, but I think you're starting to see those, and that's why I think you could get into Homebuilders before now because they've started to show strength. And this is one of those names that feels like it might be at the beginning of a nice breakout.
Yeah.
So I think pushing above the 200-day for me would be sort of like that final check mark, because that would also get us above the April and July highs and show that there may be further gains from there. So potentially an actionable chart here in healthcare.
Yeah. It's an interesting one too on the kind of the ultra long term. If you zoom all the way back, I mean, it's basically testing like its COVID era highs. It's almost a breakout retest bounce off the COVID era high. I mean, super long term, but that's an interesting structure. I got to say, so one of my little fun games that I play, because investing is all about keeping it entertaining for yourself. I like to hunt for dojis. So this is kind of like my Where's Waldo of charts, right? Yeah. When I'm picking stops, when I'm picking entries, dojis, I call them indecision candles, right? It's the market saying, we don't really know. Buyers and sellers are just this total mix. And that's why you see that dynamic, that structure of a doji candle. Yeah. I like to hunt for those dojis on a chart and then stick my entries and my stops and things at kind of the key levels around that indecision in the market. I don't really want to play, the indecision. I want to be on one side or the other. Yeah. So when I look at Merck, actually, it's a kind of a fun one to hunt for. There's a really nice doji in March, and when you line that up, it lines up with kind of another doji recently. Yeah. And it lines up with that breakout. If this thing starts to work, that's a really interesting little pattern to play. I can draw some lines on that.
Yeah, because what that tells you, right, that doji candle, right, where the open and close are identical, basically it does represent indecision because we open, we trade around, but by the close, we really haven't gone anywhere. Yeah. So it suggests that there's sort of a even push and pull between buyers and sellers. And that often is a good reversal play.
Kind of a level of debate is what it's telling, what the market's telling.
So maybe the debate's over when we finally power above that. Yeah. That's the bet I would be making with a chart like this.
I like that. You can structure a really good trade on that.
Yeah. Yep.
Okay. Number 4 for me.
Yeah.
I am going to be honest. I picked 6 names. I'm cheating.
It's against the rules.
I'm cheating number 4. But we're going to, what's that thing called? It's choose your own adventure?
Yeah.
Okay, so number 4 for me is going to be a choose your own adventure.
Okay.
You get to decide. Do you think that the market is absolutely going to fall off the cliff in September and you're concerned and you don't want to be anywhere near anything that's even remotely close to a growth name? Or do you think that the trend is going to continue because it is your friend and you're going to go for a growthy name? That's the choose your own adventure of pick number 4 in the Roze side of the table over here. So on this market stinks and it's only getting worse, we have McDonald's.
Okay.
Pick up a little bit of yield. Okay, this thing pays a dividend. It's a nice breakout. This is a nice chart. It's trending. It's actually kind of starting to outperform, not overall over the last, this is a 1.5-year chart. So hasn't outperformed the market over the last 1.5 years, but in the short term, actually starting to outperform on this run higher. This is a lot of meaty price action to work through when we talk about those stop levels, right? You got a lot of price action to work through. I mean, my kind of roughly 8% first stop is way below the 200-day moving average. So tons and tons of price action to work through here. You almost got the entire consolidation range. Starting to pick up a little bit. It's making the breakout. It's riding the 20-day higher. Moving averages aren't quite in the right order, but they're close. Momentum looks fantastic. I mean, out of oversold territory, now nearly to overbought territory. Momentum looks great on this name. There's a lot to like here. But it's McDonald's. It's not NVIDIA. It's not going to power the next phase of your artificial intelligence. It's going to make you a cheeseburger. Yeah. So if you don't think that the market is going to be that strong for the next 2 months, 3 months, whatever it's going to be, I think McDonald's is kind of an interesting adventure to choose. Now, on the flip side, if you are more in the growth space and you want to take a risk and you think that the trend is going to continue, I introduce you to Dutch Bros, BROS. The funny thing, these are in the exact same space, consumer discretionary restaurants and bars. Consumer discretionary restaurants and bars, there you go. So same space, you got to choose your own adventure within the same industry group. Dutch Bros is a really interesting name for a couple of reasons. This is where multi-time frame analysis is key. It's making a breakout. That's what I like to see. But you can see not a lot of meaty price action to work through. Again, why I like drawing these consistent stop levels on my charts. Doesn't mean I'm not going to take the trade. Doesn't even mean that I'm not going to have a wider stop band. But just to draw those kind of consistent 8 and 12 percentages for me, I can see that this is not a lot of price action to work through. This barely gets this thing back down to the 20-day. But this is a name that smashed earnings recently pretty unexpectedly. Everyone thought, oh my God, there's absolutely no way that this company is going to succeed. Turns out they're actually making money hand over fist. They're doing well, picking up customers, all of that. So we've had a really nice pop on earnings. We actually gave back some of those gains, kind of digested it, came back to test the 200-day. We've bounced up there. Now we're threatening a breakout level. We're sitting above the 20, which continues to ride higher. Relative strength is going in the right direction. Momentum's not great, but it's good. I mean, it's up in the bullish range. Could be climbing a little bit more. I'd like that. But on the daily, this thing is nice, and a long-term 200-day moving average that's just continuing to push higher.
Yeah.
What's really interesting is Dutch Bros has not been public for very long, so here's a 5-year weekly chart. We can see that what this is actually doing is pushing up kind of out of its IPO base. Yeah. So that big rounding bottom pattern, pushing kind of near those. I mean, the 80s is where you get to the top of the IPO, kind of initial couple weeks after going public. So pushing up kind of out of this IPO base. If you think that Dutch Bros has a bright future in front of it, if you're reading that earnings report and you think, hey, this thing is the next Starbucks, well, maybe this is a good time to take a shot at this thing. I do want to see on the weekly that relative strength really needs to continue improving. I want to see us really push out of this whole range. You can see it so clearly on the weekly. It's just a really, really choppy, wide range. I mean, that's a huge range. It's almost 50%. Yeah. So a lot of volatility in this name. It's definitely no McDonald's. It doesn't give you any yield. It's way smaller, but it's in the same space. It's got a good scooter. It's a good chart on the daily there.
It's really so you cheated big time picking two stocks.
I did.
So I don't know if I'm going to forgive you for that.
Will I not be invited back next time?
I don't know. We'll see.
Okay.
But I love this comparison. And on the daily chart, they look very, very similar. Yeah. This is a great illustration of where the weekly charts tell two very different stories, right? McDonald's is this long-term appreciation. I mean, it's a classic kind of blue chip, slow and steady kind of working. It's McDonald's. Dutch Brothers is more of like this. It's really more of a recent IPO name. Yeah. And if you when you zoom out, that's when you realize we rallied up to that previous IPO price. Yeah. And then we're in this classic coil pattern, right? Yeah. The lower highs, higher lows, kind of coalescing right below that level, which what that means, sort of like building up momentum, and then a breakout can be incredibly powerful, right? Yeah. So this could be trading more like a growth name. Yeah. Whereas McDonald's, there's nothing growthy about McDonald's, right? That's more of a value play.
Totally.
Dutch Bros in particular on the weekly chart, I think is a very constructive setup there. Yeah. The weekly PPO, not to go completely off grid, but really close. I mean, almost giving a buy signal this week, a bullish crossover, which it hasn't done in quite some time. Last time I had one of those is sort of in the fourth quarter of last year. I like that setup. Daily chart's kind of pretty good and sitting up against resistance. The weekly chart is what makes me a lot more excited. Yeah.
Okay, so now it's a choose your own adventure within a choose your own adventure, because you got to choose, do you want the daily setup, you like that, or the weekly? You got two.
There's so many, right?
Yeah, okay, I'm sorry I cheated.
Good picks.
I couldn't help myself.
I still get a fifth pick though, right? We don't have to cap it?
No, actually, I stole your fifth.
That's not how it works. Okay. I'll take control then, and I'll go right to my fifth pick then, which is silver. I almost picked gold miners and went GDX. I'm like, all right, I feel like we as a team have talked gold plenty. Yeah. So let's remember that there are other precious metals out there, and I would say gold. Gold, obviously, silver as well, breaking out again this week. The chart of gold has been consolidating for a little while. The GLD is just starting to break out again. Spot gold is breaking to new all-time highs again this week. And I'm a little hesitant to say gold and silver are safe havens, so that's bad for stocks. I don't think you can draw that conclusion because the relationship between gold and silver and then stocks are not as consistent as you think. Gold and silver have rallied when stocks have rallied. Go back to January and February of this year is a good example. But I think the chart of silver miners is one of those that I would just describe as innocent until proven guilty.
Yeah, 100%.
Right? So you think of it as a checklist. You start at the top of the chart, you go down the list. Are we making higher highs and higher lows? We are. Are we above upward sloping moving averages? They're in the proper order? We are. Is the momentum strong? It is. Is the relative performance strong? It is. So for me, like right top to bottom, the script is all sort of classic uptrend behavior. At some point, that's going to stop, and that's why I think the 21-day EMA for me is a really good, just initial, sort of level to look at. The way I think about that is until and unless we break the 21-day EMA, things just aren't getting that bad. Anything above there is kind of noise, right? It's just kind of normal market activity. Breaking below that level, you can start to be concerned, but I don't think, I think until then, you have to be comfortable with it. So, gold has been consolidating for a while, silver as well. We're really strong earlier in the year. They kind of stabilized through the summer, and now I'm seeing a re-exertion of the uptrend phase. And if you say, is it too late to be in something like silver, I would say go back to like the end of May when it made its previous break to new all-time highs, and it's kind of worked out since then. So one thing I've learned over my career is not to be afraid to buy new highs, because sometimes some of the best gains happen after that move to the upside. I think silver, gold stocks still remain still deserve a consideration for a portfolio.
Yeah. I think with a lot of those metals, and there's so many different ways to play it now with ETFs and everything, with a lot of them, when they start to rip, they really rip. And it's kind of like it's going to feel late, but there's a good chance that it just keeps ripping.
Yes.
And as long as you set your stops and you're just kind of like holding on and letting it do its thing, you can work. Has copper come across your desk at all?
So it is. I mean, right, copper more of an industrial metal, right?
Yeah,
so and in some ways they've moved consistently, but
that's another one that just that space is also working. There's a bunch of these different.
The commodity space
move.
In general, I think, and again, I'm a big fan of areas where I feel like people have ignored, and especially with precious metals, people often think of it as a safe haven. So you don't want to go there unless you're really bearish about everything else.
Right.
Friendly reminder: these things can do well regardless of what equities are doing, and so I think using the charts as evidence of what's working and what's not super important.
So what is this? Silver miners are up like 90% year to date.
Yeah.
Bold.
I mean, there are
miners.
Very few growth names that have had that kind of returns. They're out there, but I mean, it's not. I mean, it's these have outpaced the AI trade.
And it's also not a 90% year to date move, but with a 50% correction. It's like it's gone in one direction.
That's right.
Up 90%.
Yeah.
The accumulation distribution on this, it's kind of a
strong
tertiary, I guess you'd say, indicator for me. Super strong, especially recently. God, that thing is just accelerating.
And that's
really
what I think when you have something like this that's working, if you're afraid of buying too late, I would say volume-based indicators for me have been really helpful, because what happens at the later stage, what you want are things that will tell you before the top, things are starting to change a little bit. So momentum, divergences are one way to do it. Seeing distribution days, right? Seeing big down days where someone that has sat on a ton of gains starts selling, that'll show up on volume bars, and that'll show up on things like Chaikin money flow and accumulation distribution. They start to rotate lower. I'm not seeing that yet here.
What a move.
It's impressive. Still going.
All right.
Your last pick.
Fifth, maybe sixth pick. Fifth-ish pick is going to be a company you've never heard of. It's Meta. I actually thought you would have picked this one. I mean, it's kind of like everyone's going to pick this one. Also, just got to say, I am shocked that neither of us picked Apple, because the most dumped on name is rocking. Especially today, as of this recording.
It's breaking out again today.
Anyways, Meta, though, has been incredibly strong, especially off those April lows. So involved in all the AI talk. There's been the crazy hiring stuff and all the offers they're making. Some of that might be changing, I guess, now, but what a name. And I think a bright future ahead of them, just continuing to stay involved in the whole AI revolution. But technically, lots to like here. I mean, again, I got to come back to that breakout, retest, bounce. So we've made this breakout. We had that huge pop on earnings, just absolutely crushed earnings. What's interesting is that we've chopped around a little bit. We did actually push higher, but chopped around generally, and we've been moving lower on really weakening volume. So this is where, again, I'm not a huge volume guy, But it is helpful to have on your charts. I just kind of put it off to the side, and when I need it, I need it. This is a good case. Declining volume in the sell-off, that's something I actually like to see. Momentum weakening, which makes sense, but still holding above 40, which I think is crucial. So if we can see momentum start to push up, the most important thing, that's all trend, relative strength is declining too. I want to see that turn around. I want to see that really turn around on this kind of longer-term uptrend that you could draw.
Yep.
The most important thing, though, the breakout level, we're kind of right there. You can see that green line. Again, I like to use those for kind of my ideal entries. And we're right on the 50. So we actually broke below it finally yesterday. Now we've bounced. We're sitting right on that 50, which is right at the breakout level. I mean, this is where investing is and trading is challenging because you got to take a swing. But I think if you swing the bat at this one, I mean, it's got a high probability of moving higher. These are the types of sort of, you might call them a fat pitch. You call this a fat pitch?
I was just going to throw that out there.
Look at what we did.
Fat pitch chart.
It's almost like I've talked to you before. It's funny.
Yeah.
This to me is a fat pitch chart. And the moving averages are all in the right order. Not necessarily the right slope, but they are in the right order.
Yeah.
I mean, there's just a lot to like on this thing.
Yep. That fat pitch thing, as a reminder, comes from the general approach a lot of institutional growth investors would use, which is a strong long-term trend, but weaker short-term. Because if you're running a $10 billion fund, you have to worry about capacity and how easy it is to build a position. So buying into short-term weakness just makes it a lot easier, and then you don't ruin your trade by flooding the market with orders. So it's pretty interesting. Classic technical setup here, right? With a breakout and then a pullback to the breakout level. So in some ways, this is a very encouraging chart. My bearish hat, though, which is definitely on my head at the moment, says, what if this doesn't hold? I think that's, if you're looking for sort of signs that would tell you, NVIDIA breaking below support, Meta not holding that breakout level, that would be pretty bad. Those volume indicators we talked about, though, are actually starting to improve. While Meta's pulled back a little bit, right? The accumulation distribution is actually breaking out a bit. The Chaikin money flow just pushed back above the zero level. So some of those volume-based indicators are actually implying that there's some buying going into the short-term weakness. So I have to agree. That's a great pick. I'm glad one of us picked that one. That's a good one.
Yeah, someone had to. I gotta pause here because it's a great opportunity. I mean, you just mentioned the bear case of what if this doesn't hold. So again, I want to highlight why I think these horizontal lines on my charts are absolutely crucial. So this gives me an opportunity to say, here's kind of my ideal entry point. I want to see it, hold this level. Ideally, I'd be buying a little bit above that. That's kind of my target though for an entry. Now, I mentioned I've got a couple other lines on the chart. Obviously, we talked about the stops. So this gives you those, for me, roughly an 8 and a 12, 50% stop. So there's 2 stops actually on that position, that initial position. So you can see I've got enough kind of meaty price action to work through. But I don't need to let this thing come all the way down to one of those stops. So a lot of times, if the trade goes against me, if it doesn't hold the breakout, I'm going to get out of it. I don't need to take a 10% stop or a 10% loss on something. So what I like to look for, again, some of those kind of key candles, I would say somewhere right in here, let's call it 701.50, would be kind of an area of concern. So I come down here, I've got my orange line, 701.50. 701.50 is kind of my level of concern. So I've got my stops drawn on this chart. I got both of those. I know my kind of entry. Let's say we did take that trade. Now I've got my level of concern. If it fails and it comes down to test that, I might get out of the trade. That's me saying this isn't going to be a hard stop that I've entered with my broker, but it is a level that I might want to say, cut your losses, let's get out of it, take a shorter loss. Now, on the flip side, I might want to let this thing run up to kind of this breakout, I would say. So the close, let's pick on that candle, 785.23. If we get a move above 785.23, that would be an area where I'd say, okay, this is starting to work. This is an area that we might want to add to this chart. If we can make this move higher, Meta keeps working, it starts to outperform the market, everything is pointing up, and we want to add to the position, that's where I would do it. So I draw those lines on my charts, and again, because I've actually built this into all of my chart styles, my chart templates, it's always there for me. Every single chart style that I have has this set of lines, and so it's easy to structure those trades. And I'll do this for names that are on my watch list, even if I honestly don't think I'm going to trade it. It's helpful to be able to print those lines right on the chart, build the trade, plan the trade, and then if I do say, you know what, this thing looks fantastic, I'm going for it, all those levels are kind of right there for me because I've done that little bit of prep, I've done that little bit of planning.
Yeah.
So it's nice on a chart like Meta. It's actually kind of well structured for this type of.
It's a perfect example of that. And I think, I mean, your line strategy that you've talked about, it's a brilliant way of using a platform like Stockcharts
I mean, it's
to
simple.
structure things. But I think it also helps, especially when you start to compare charts.
Yeah, exactly.
Because you can quickly say, okay, this is near my entry point. This is nowhere near it. This is testing a breakdown.
Yeah.
And when you have that consistent approach, that's when you can really compare things consistently. I think
if
that's
you've
a great
got
way.
tons of stuff on your watch list, I mean, I look at a ton of charts. I've got, let's say 24 stocks on my watch list.
Yeah.
Once you draw those lines, it's easy. Even if one has a big day, it's easy to say, I don't have to worry about this right now because it's nowhere near the ideal entry point that I drew on this chart when the market was closed and I was at my most rational. So that's my sales pitch on horizontal lines.
It's well said.
I wish I could trademark horizontal lines.
Unlikely.
Yeah.
But you can promote them.
Yeah.
They're very good.
Dave, we are all the way through 10, kind of 11, depending on how many adventures you chose, picks for the month of September, also known as June. Thank you for joining me. This was fun. Did you have fun?
Always fun, my friend.
Okay. Good. We are going to do this again next month. Maybe next month we'll also revisit some of these picks. We've had a lot of people asking us for that. So maybe we'll take a look back.
For sure. I think that'd be fun. Yeah.
That could be a good way to do it. But viewers, hopefully you guys have had a good time with us rocking on the show today. Remember, a couple things you can do to help us out. If you enjoyed this video, give us a like down below. That helps us out, of course, with the YouTube algorithms, all that kind of stuff. Plus, it's just fun to give someone a thumbs up. And, of course, subscribe to the YouTube channel. We got so many fantastic contributors like Mr. Dave Keller contributing their thoughts, their ideas, their charts, everything that they're seeing in the markets. You can truly see the markets through their eyes if you're following along with the Stockcharts TV YouTube channel and the articles on the Stockcharts website. So be sure to hit that subscribe button as well. Turn the notification bell on. Makes it easy for you. Lastly, we are highlighting a ton of features on this show that you gotta be a Stockcharts member to take advantage of. Things like those style buttons, setting up our charts, having these things saved to lists, all the stuff that we're doing. We're making it seem seamless because we have access to all these tools, these professional level features, but you can do the same. So sign up for a free Stockcharts trial. All you gotta do, go to stockcharts.com, look for that big green button right at the top of the homepage. Easy to sign up and you'll get access to all of these same tools that Dave and I and all the rest of the contributors on Stockcharts are all using. So absolute no-brainer, I think. Take advantage of these tools, level up your investing, your trading, and your market analysis. Sign up for that free 1-month trial of Stockcharts today. Dave, thank you again. This has been a blast. We'll be back in the studio very soon. But until then, keep calm and chart on, my friends.